It's not just the deliveries in the fourth quarter coming in at about 1,550 versus most expecting at least 2,500. It's the guidance for ramping up production of the Model 3. Their previous guidance was 5,000 per week by the end of Q1. We're not even going back to where it was before that, which was supposed to be at the end of Q4. But that was the previous guidance, by the end of Q1. Now they're saying by the end of Q1, it'll be just 2,500 Model 3s per week, and then 5,000 per week by the end of Q2. You would think that potentially Wall Street would slam them on slowing down the ramp up of the Model 3. But that's not what we're seeing in the analyst notes today. Here are a few of them. Evercore, ISI, Model 3, pain, won't go away. Deutsche Bank, growing pains once again, focus attention on cash. Morgan Stanley, delayed Model 3 ramp, still 2 times our forecast. We buy the dip. And if you are bullish on the future of Tesla, if you really think that the Model 3 is going to pay off, then this is one of those dips that you take a look at. Take a look at shares of Tesla over the last year, and we're nowhere close to where we were earlier this year. It is not down in that 280 range that a lot of people like to talk about, but it is one of those dips that gets some attention. Finally, in terms of overall deliveries, yes, Tesla did exceed its forecast of delivering about 100,000 vehicles. Officially, they delivered just over 101,000. But the guidance has changed so many times, guys, that I hear very few people saying, well, they're going to deliver X number of vehicles this year. It's about the Model 3. It's not about overall production. It's about the Model 3.
And Phil, there are certain other issues that sort of extrapolate from the delayed ramp of the Model 3. I mean, margins won't, in terms of margin efficiency, that won't ramp as quickly as anticipated by Wall Street. And also you run the risk that consumers, they might actually cancel their reservations. I mean, they didn't put very much down. It's not even clear if they'll lose their deposit money if they do cancel because they've got to wait even longer for this 3 ramp.
Melissa, I'm going to be in the camp of those who believe that we're not going to see widespread cancellations of reservations. Right. Most people who have put in a reservation are very bullish on Tesla. They believe in the company. They've already had those reservations in for a couple of years. Okay, so they got to wait another 8 or 9 months potentially, or however long it'll be. I don't think they're going to cancel on that. But you do bring up a good point in terms of margins, in terms of cash flow, and in terms of whether or not this company needs to do another capital raise as it continues to work through these production issues.
Right, and in terms of the margins, I mean, I think Jeffrey Osborne of Cowen was making the point that they were discounting or promoting S and X, and so there was pressure on that part of the stronger business, and then the Model 3 ramp challenges margins overall.
Correct.
And that challenges, of course, the ability to raise money, especially when the latest bond offering is trading below par at this point. I mean, Wall Street, Phil, I mean, have they come around to the idea that perhaps it might be a little bit harder for Tesla to actually raise money when they need to go to market once again?
I think they believe it might be a little bit harder, but nobody believes that it's going to be impossible, nor will they think of it as a hurdle that can't be overcome.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.